Well, thank you so much for being here. Good afternoon. My name is Kelly, and I am a case manager at Seton Center. And I am here with some wonderful volunteers, some volunteer income tax assistants in Northern Frederick County. So I'm going to ask you guys to please just take a minute and introduce yourselves.
Okay, I'll start off with that. My name is Bob Lilly. I'm a Frederick County resident. I'm been doing this now for a few years and just glad to be of help.
Well, thank you so much for your expertise. And I guess we'll just go around. Bob, would you mind taking a minute and introducing yourself also?
Sure, no problem. Yeah, I'm Bob Fenimore. I'm the assistant site coordinator. Bob, who just introduced himself as a site coordinator. We have 4 of us at our site. We've been working at Thurmont for many years, and also down in Walkersville and Woodsboro doing taxes, and we have years and years of experience. So this has certainly been an interesting year, as we'll talk about. But glad to be here, and we're glad primarily, as Bob will talk about, we focus ourselves on Thurmont, Emmitsburg now. We used to cover a broader area, but
Okay.
but we focus there now because we know that's where the need is greatest. So glad to be here.
Yeah, well, thank you for being here. And
Sure.
Mary?
And I'm Mary, and I'm probably the most junior member of the group. This is my 3rd year of volunteering with the taxes, and I'm glad that we're able to help out a lot of your clients.
Well, thank you. We're excited too. So if you wouldn't mind sharing a little bit about what is VITA, and what do you do? How do you help the community?
Okay, I can start that off a little bit, and others can chime in. VITA is a network of volunteers that IRS has asked to help with the taxes. So the emphasis on volunteers. We are not paid. We're not employees of IRS. We're not employees of county or state government at all. And we're also not what the jargon, the IRS calls paid providers. We do our activities for free. We don't accept donations. We don't. We accept thank yous and stuff like that, but no kind of monetary reimbursements and everything.
I think it's also important to point out that we are certified by the IRS. So we have to go through a couple of tests to be able to provide the services. So even though my background is not in accounting or tax preparation, I've studied and have, because of the Bobs here, have helped learn what to do, and have been able to successfully pass the certification test that we have to do.
Okay, that's really helpful. Thank you for pointing that out, because even though you might be volunteers, you're highly qualified.
I might add one thing about when people hear VITA, there could be some confusion. There's a number of groups, not only in Frederick County and Maryland, around the country, who do VITA, volunteer income tax assistance. In Frederick County, there's primarily 3 groups. The first one is AERP tax aid. Everybody's heard that. They predominantly do taxes at senior centers and predominantly help senior citizens, but they also help other taxpayers as well. The other is United Way. This year they're working down at the Bernard Brown Center in Frederick, and then we're the 3rd group, who is a VITA group sponsored by NARF, National Association of Retired and Active Federal Employees. And so there's 3 groups primarily in Frederick County. And so I want to, in case anybody has confusion, well, how do you relate to Bernard Brown or United Way or AERP? We're separate from them, but we're all under the same program with the IRS,
Okay.
Same program.
Thank you very much for explaining that, because that was something I was actually not aware of. So yeah, thank you for educating me there. So you're part of you serve Northern Frederick County.
Go
ahead.
Yeah, we have decided, as Bob Fenimore was saying, it's up to us to determine our jurisdictional geographical area. We've just decided as a group that we want to serve that area, and let AARP and the United Way determine their own group and who they want to serve. So last year we had a list of zip codes for the areas that we wanted to serve, which were basically north of Woods, including but north of Woodsboro, and then going as far as the state line. And this year we're finding ourselves mostly doing Emmitsburg and Thurmont.
Okay. That's wonderful to know. Thank you. So as you mentioned, you've all been doing this for a number of years now,
Yeah.
but I have heard a lot of talk in the community that this year taxes are a lot different. So what's different for you about how you're doing taxes this year?
Want to jump in, Mary?
So probably the biggest difference is that we're not able to really sit face to face with the client. And so we had to set up a system whereby when clients call to make an appointment, we have to meet them and pick up all of their documents. We have the other member of our team has really has taken that on and done a great job doing that. He meets them at the Thurmont Library, picks up their documents, and then the next day he brings them to where we all meet to do the tax preparation. We then call the client if we have questions or to go over what the return is. Then after we complete the return, then we have to contact the client again so that they can come back to the library to pick up their documents, to sign their document, so then we can e-file the return. So the process in itself is a little cumbersome, but I would say it's worked out okay. I mean, we've,
Mhm.
I thought it was going to be really a nightmare, but it really hasn't been. The people have been very good about um, bringing all the materials that they need, and it's been a pretty straightforward process, even though it's taking much longer for each person.
Okay. Yeah, this is, I think, a crazy time for all of us, but it's really wonderful that you've worked out a system where people can still get the help that they need.
Yeah, it's not ideal. We'd like to be able to sit down with a person and actually talk to them and stuff like that. But I think, we all agree, we're making it work. We hope everybody thinks we're making it work.
Yeah.
Mhm.
I think the other important piece that I don't think we've mentioned is we're really only taking on clients that we have done last year and possibly the year before.
Okay.
Mainly because we don't have that face-to-face interaction, and we're able to really look at what their tax returns were in previous years. So we really kind of, haven't taken on brand new clients, although we are taking on a few. So we're trying to give it the availability to mainly the people that we've serviced in the past. And if we have extra spaces, then we take on people that we have not serviced in the past.
Okay. Okay.
I
So
could, I, I
yeah,
could add
please.
one comment on that. One of the reasons by helping just people we've done in the last 1 or 2 years, and I can add that we use a professional software, and we're trained on that software. It's called TaxSlayer. I think it's also available for home use. Okay, just like TurboTax and H&R Block. But we use a professional software. We're trained on it. We have support by the IRS, and we have support by TaxSlayer customer support, and it's an online software. And for clients we have helped in the past 1 or 2 years, when we enter in their social security number to start their return, if they have information in the system from a prior year, it'll all carry forward and save us a lot of input: name, address, social security number, date of birth. All of that will carry forward, who their employers were, saving us quite a bit of keystroke input time.
Okay. Wonderful. I'm sure that does help with streamlining a lot.
Oh, yeah. Yeah.
So if someone, how would someone know if they're eligible for VITA tax preparation help, even if they haven't accessed it in the past?
We have a phone, a dedicated phone just for our northern services, and the client will call, and there are a number of questions that we ask to see whether they fit our criteria. So, mainly we do a certain level of income, geographic area, have we helped them in the past, and if their returns are pretty straightforward and simple. There are certain things that are out of our scope, mainly bigger businesses and things like that. But so that we do have a number of questions that we ask them to figure out if we're able to help them out.
Yeah, that's the important point to make. We basically are doing federal and mail-in state returns. we cannot do all federal returns, and IRS has a long list of conditions that we cannot address and everything. Like somebody can come in with a form, and that form tells us that it's going to be it's not just complicated, it's the fact that we just haven't had what IRS thinks we need to have, this background or experience or whatever, to do that. So they've classified it out of our scope, and we have to refer the person to another paid tax preparer.
Okay. Okay.
One thing I can add on, the IRS does give us an income limit. And we basically have two categories of clients that we help. One, those that are working, and they're usually younger and they may have children. And then those like us who are older, seniors, retired, and things like that. So those are basically the two categories. And for the people who are working and are eligible for the earned income tax credit, and also other credits for those with children, like child tax credit. Okay, the maximum income right now, and that could change with all this new stimulus legislation that was just passed. But right now, the maximum income for a family who is working is around $57,000 a year, and the IRS would like us to cap those we help at that level, because above that you can't get earned income tax credit because your income is too high. It also depends how many children you have as well. For the seniors, it's a little different. The IRS does not give us an income limit. We pretty much set that ourselves. And you'd find the same thing if you went down to one of our sister groups is in the same sponsorship is the Frederick Senior Center down there on Tawny Avenue in Frederick. Mm-hmm. And they have a very large group down there, and they're also affected the same way. They can't work at the senior center because of COVID. For seniors, one thing we haven't mentioned, and maybe we would, is that we also try to help people. For Maryland and Frederick County has some homeowners property tax credits. Mm-hmm. Okay. And we help people with that when we can. It's been difficult this year, but you have to apply for that. You have to submit with an application to the state of Maryland and submit a copy of your latest tax return. Well, we do their tax return, so that's why we can help them. But Frederick County, primarily for seniors, Frederick County has a Frederick County senior property tax credit. Mm-hmm. And I believe that the income limit, including all Social Security, to qualify for that is either $70,000 or $80,000. Yeah, I think it recently went up in the last year or two.
Yeah.
But that includes all Social Security, not just taxable Social Security. Mm-hmm. So we try to orient ourselves to helping seniors in that income range because they can qualify for the property tax credits, and we help them do that.
Wow, that's a wonderful service, and something probably a lot of people don't realize that they can access.
Right.
If anybody has questions about whether they're eligible for us to help them, they could give us a call. Our phone number is 301-471-5757.
All right, thank you. But so as a general sense, just for our audience, if they're a working family, they may qualify if they make less than $57,000 a year as a family.
Generally, yes, that's correct.
Yeah, thank you. That's kind of a good rule of thumb, just so people aren't calling if they're way over income. Okay.
Right.
And so if someone is new and they maybe aren't able to get access through Northern Frederick County because you don't have appointment spots available, is there another VITA group that they can call or somewhere else they can go?
That's going to be difficult to answer this year because so many of the VITA groups have been affected by COVID and have cut back in terms of number of appointments or how they do them and all. AARP is, as Bob mentioned, is operating. United Way is operating and all. There is a number that Frederick County maintains, 211, that can refer you to some groups, but I'm not sure if that 211 operator would know whether these groups had appointments.
Okay.
IRS also has a website. IRS has lots of resources on their website, and one of them is a lookup tool to find free tax preparers. And our name is listed, and some other groups are listed. And we've gotten phone calls from Germantown and Potomac and Virginia, even looking for people. You just have to try the numbers.
Okay.
Mhm.
So either 211 or accessirs.gov.
Right.
Okay. All right. Thank you for that information. I am going to ask too. I don't know if you guys are familiar at all with when United Way, they used to have a site where people could navigate themselves called My Free Taxes. I don't know if you guys are familiar at all with that. Is that something
No.
you know? No. Okay. I wasn't
Well,
sure if that.
Unless,
Although
unless
I,
that's an IRS. The IRS has some tools
IRS
like
has,
that on the IRS
Okay.
website.
yeah.
It
Okay.
might be an IRS program. Yeah.
Okay.
IRS has something they call a fillable form that you can do yourself. And it's
Mhm.
different from the taxpayer program that we use is, or some of the programs that other groups may use, because the IRS software on the site that's free
Mhm.
can only do math calculations, add things up, subtract things and stuff like that. They don't do logical searches like, are you eligible for this? Or you eligible for that type thing,
Right.
which our program does pretty automatically and everything.
Mhm.
It's really a help to us to do that.
Yeah.
So there are some tools that people can use that to do their own taxes and still get them filed electronically. Filing electronically is a very key thing in this whole process.
Right.
Everything gets done much faster.
Okay. Okay. And you did mention before that you prepare federal and Maryland state taxes, correct?
Right.
And that's
Okay.
something we've had to walk back from. In past years, we tried to do some neighboring states taxes. But with this, all the complications this year, we're just unable to do anything more than Maryland.
Okay.
And AERP is the same way, because we have to be trained in state tax preparation as well as federal, and every state is different in various ways. So we primarily want to focus on Maryland, because that's what we do, and we're trained to do that.
Okay. All right, wonderful. Thank you for that. And I am not a Maryland resident, so I have a question that in the Maryland area, or in the northern Frederick County, are there also local taxes that people might have to file every year?
The local tax for Maryland, okay, the state of Maryland, as part of their income tax, collects taxes for the county and for the jurisdictions that are city, incorporated cities like Vermont,
Mhm.
and I believe Emmitsburg is one and all. Those local taxes are taken care of when you file a Maryland tax.
Okay. Oh, so
Now,
that's nice. So all people have to file every year, income-wise, would be their federal and Maryland.
right, unlike Pennsylvania, I know Pennsylvania does have a local tax. We
Yes,
don't
they
do
do.
those.
Yes,
We
they
don't
do.
do that. You might have to go into your local tax office to have that done. We do not do those. Yes.
Okay. That's good to know. But for Maryland residents or anyone who's recently
Right.
moved to Maryland, they don't need to worry about that.
No.
So that's good
No.
information. Thank
And we're glad of that too.
you. So how would someone know if they need to file a federal income tax return? Because there are times, correct, when someone will not need to file.
There are definitely times people do not need to file. We can give you some general guidance on it. The real definitive guidance will be found on either an IRS website or to call us. We're quite willing to answer questions for people if they give us some information on the phone. So generally, if you don't need to file, let's put it in a positive way, you need to file if you've had money withheld and you want to get it back. If you haven't gotten your stimulus checks that were due out last year and the beginning of this year, those are the first two. I'm not talking about the new one.
Mhm.
I'm also not talking about the mail-in stimulus check.
Mhm.
So I don't want to confuse that issue. But generally, if you have an income that's over what the federal government calls a standard deduction, then you should file. Actually, you're required to file. And then even if it's below that standard deduction, but you've had money withheld or the stimulus check question, then you want to file.
Okay.
But give us a call. Sometimes it's more complicated than just looking at one piece of paper. Sometimes you have income from, say, 2 or 3 places, like you have income from a retirement account and you have Social Security, and you're not sure how the Social Security check figures into it and everything.
Mhm.
We can tell you approximately, how that's going to work out.
And the money and the gross income that Bob just mentioned about being above or below your standard deduction generally does not include Social Security. You start with income that is wage income, pension income, things like that. Social Security doesn't come into play unless you've got a lot of other income, and you call us and we can go through the levels for that. But in the beginning, it generally does not include Social Security. So if that's all someone has, they really, unless you have, as Bob said, withholding or other things like the stimulus, would generally not have to file. But there are rules, and we can go over those with and help you with those.
Okay, awesome, thank you. So just to be clear, that this year, that's what's kind of new, is all that stimulus payment coming in.
Right.
If someone did not receive the first two payments and they know that they should have, regardless of whether they have to file or not, to get those payments at this point in time, they would need to file.
That's absolutely correct.
Okay.
Do you want to
Okay.
address that, Mary? Any more on that?
Yeah, no, I think that, you said it exactly right. I mean, if they, sometimes what we have seen, or what I've seen, is that they've gotten the first stimulus check, but not the second stimulus check.
Mhm.
And I
Right.
think that's because they filed in 2019, or they filed in 2018. Well, regardless,
Yeah.
they've only gotten one of the stimulus checks, and so they really need to file to get the second stimulus check, which came out in January. And now I probably is going to affect the newer stimulus checks that are going to be coming out soon. So I think anybody that either didn't receive it or is eligible should file a return.
Okay.
If I can add something to that, what Mary said, the first and maybe second, likely the second stimulus payments were based on your 2019 tax return, if you filed 2019, otherwise 2018. But it's generally the latest tax return that the IRS has on file for you.
Mhm.
By the time when the stimulus checks were mailed out last spring and then in January, people hadn't filed 2020 yet. Now we're in the middle of doing that. That's why the filing year, the latest filing year, and because, as you know, the stimulus payments have not only they have an income limit, and then they have a phase out limit beyond that. That's what that income limit is tied to, is the income on your latest tax return that they have. Generally, it's going to be 2019.
The other thing to keep in mind is if a family has had another child during 2020, that also they would be eligible to get some money for having that child. So I think that's important to keep in mind.
Yes, thank you. And another thing that I've seen. Oh, sorry. Go ahead.
I was just going to say, the way we would approach that issue if somebody calls us or come in with some tax documents is we would be asking them questions. What did you receive? We would not make the decision what should they have received. We would put that information on a tax form. That money is not taxable, but IRS wants to know it because IRS will be doing a calculation and say, what should you have got?
Okay.
We don't do that.
Okay. I have run into several people who maybe they got some of the stimulus, but not everything that they were told they were eligible for.
Right.
So in those cases, would they also want to make sure that they file?
Yes.
Okay.
And tell us what they actually received, and that's what we put into the software.
Okay.
Yeah. Don't tell us what they think they should have received. We need to know, what did you actually receive? Yeah.
Do they need to bring documentation of what they've actually received? I know the IRS was sending out letters.
Yes, the IRS was sending out letters, and you were fortunate to get one, and fortunate to realize what it was when you got it.
And didn't throw it away. Yeah.
Yeah, some of us did that. There are various forms of documentation. I mean, the letters are one. You can go, if you have a bank account, it has access to electronic printout or just your paper printouts, you can use that as documentation. But in general, when we ask the question, what did you receive? We're not asking you to bring documentation on that. If you have it, fine, but we don't ask it. If by chance, and this comes up rarely, if by chance IRS would audit you, they might ask for documentation on that. They ask for documentation on other things.
Okay.
And on the thing about, a lot of people are very afraid when we the word IRS audit is used.
Mhm.
Very rarely for the clients we serve, the IRS is not going to audit you by sending someone out to talk to you. They're going to send you a letter. We'll talk about that as far as potential scams. The IRS is going to simply send you a letter. And if they want more information or want documentation, they will simply ask for it. And they will give you time to send it in. And hopefully that will answer the question. They're very good to work with. They're very fair. People should not be afraid of the IRS. That's not the scams are going to make it look like these are the bad guys. They're not the bad guys. They really are not. They're here to help us. Believe it or not.
I'm sorry, Bob. If you do happen to get a letter from IRS and you can't make heads or tail of it, you can generally call us and we can try and work with you and help you through that.
Oh, I'm sure that would be very helpful. Thank you. So besides the stimulus changes and some of those other changes, are there any other tax changes for 2020 that people should know about?
Where do we start?
It's
Go ahead,
easiest to talk about the changes that were in effect before last week, before the president signed his bill.
Well, maybe we start there.
Yes.
Yeah.
There was every year IRS comes up with inflation-related changes. It says, okay, the standard deduction is going to increase by a certain amount. The limits for EIC and earned income credit will increase by a certain amount. Those kind of inflation-related changes have been this year, 2020 is in the other years and all. This year, there was a special change. A couple of years ago, the government made a change where they try to encourage everybody to get, take the standard deduction more often and everything. And one of the implications of that change is if you took the standard deduction, you could not itemize and say how much money you donated to charities. This year, they made an exception and said, okay, if you take the standard deduction, you can declare you can claim up to about you can claim up to $300 for cash contributions to charities. On the mail-in side, mail-in recently, probably in 2 or 3 weeks ago, decided that the state of Maryland will not tax unemployment.
Oh.
Now, that has affected us because we have gotten a number of clients that had unemployment benefits during 2020, and we've had to complete part of their returns, but not file them, waiting for Maryland State to come up with all the right forms. So we have to hold on to them. But that was as of, say, the middle of last week before the president signed his bill. Now there's been several other changes to the limits on EIC, to the treatment of unemployment benefits, to the child tax credit, a whole host of changes. And we're waiting to see what that means. There's been things in the general press and some in the accounting type literature, but we have not seen anything specifically from IRS about them.
Okay.
The state of Maryland has decided to extend the filing deadline to July 15th.
July 15th. They just did that yesterday.
Yes.
Okay.
And
And
that's
the IRS may follow suit. We're waiting to hear.
correct.
Okay.
Yeah.
Okay, so there is a potential the tax deadline could get extended.
Potential.
Okay.
Yes.
There's a potential for it.
Mhm.
However, we are really encouraging people to file on time, because the sooner you file, the sooner you're eligible to receive your stimulus check. And it shouldn't be, your filing should not be put off just because, you don't feel like doing it. It really should be done in a timely fashion.
And if you're eligible to receive a refund, you would get that faster, correct? If you filed on time
And use direct deposit. Yes.
and use direct deposit.
One thing to add on unemployment. In the past, generally, unemployment income is taxable federal and state. That's the standard rule we've always worked with. This year now, things are changing. Let me say that for those, we have generally been holding our returns that we have, which have unemployment income because of these changes. However, for other people who didn't come to us, or if they do their own taxes, if they have already filed their tax return and they have unemployment income and they paid taxes on all of that unemployment income, and now that there are changes coming, once the changes are settled out, the forms are established, the software is updated by all the software vendors, they will have to submit an amended return to take advantage and get money back that they may have paid on unemployment income that is now due back to them because unemployment is all or partially tax-free.
Okay, that's really good information. Thank you. So
So,
again,
I know-
people who, okay,
in a perfect world, IRS might say, well, we've processed a certain number of returns in the millions or so. We'll go back and we'll try and catch up those people and all and fix the problems. That may not, probably will not happen. And the amended return may be the only way out. But we have to wait and see. We don't know what IRS is going to do.
And just to add on that, if the IRS changes someone's return for some reason, and their servers, their software can make the change, maybe something as simple as unemployment now not being taxable. If they make any change, they will write you a letter and tell you that they made this change, and now that change has resulted in this much additional refund, and you'll have a direct deposit or a check coming. Or you, in some other situation, you may actually owe a little more, and they will tell you that. And in any case where you get a letter from the IRS and a taxpayer does not agree, okay, the IRS has a taxpayer bill of rights. And one of those says that taxpayers can appeal any decision made by the IRS. And you generally have about 30 days to submit in writing an appeal if you don't agree with an IRS decision. So, and we can help with that. We've done that before.
good to know. Okay, thank you.
Yeah, sure.
So we've had a lot of conversation here about different like standardized and itemized deductions. For those of us who are not so familiar with how that works, can you explain what those are, what the difference is?
Differences between a standard deduction and the itemized deduction?
Yes, please.
Okay, I'll start off with a very general explanation, and anybody can chime in if they want to expand on that. Standard deduction is basically an amount that IRS is going to allow without you providing any kind of documentation or any kind of extra, explaining any kind of other expenses and all. And that is usually predetermined. The standard deduction can be based on your marital status, your filing status. It can be based on your age. It can include the fact of whether you're blind or not blind and everything, And IRS has a table. In fact, every time we print out, there's a special, IRS has come up instead of just a 1040, there's a 1040 just for seniors, which is a little bit bigger print. And then that form and lists all what the standard deductions are for everybody.
Mm-hmm.
It's also in the instructions for the 1040. And anybody can access that through the IRS website. Itemized deductions is where you believe that you have more deductions, meaning eligible expenses, than what the standard deductions allows. And again, I mean, the numbers of the standard deductions are quite high. It might be 12,400 for a single person, or it might be 25,000, 24,700 or something for a married couple and everything. And again, it depends on age and whether you're blind or not. But if you have more than that standard deduction, say in mortgage costs, mortgage interest that you've paid, and high medical costs, and charitable contributions, those type of things, you would claim each one of those expenses and then claim the total of those. And if the total is greater than the standard deduction, you would generally take the higher itemized deduction. The complication comes in, and you can do this on any kind of software, basically, I think, is the fact that the mail-in state return and the federal returns are linked in this one respect, is if you take a standard deduction on one, you have to take the standard deduction on the other. If you itemize deduction on one, you have to take the itemized deduction on that. You can't pick and choose one or the other.
Right.
So in some cases, you might get an itemized deduction that's very close to a little bit less than a standard deduction. But you have to look in terms of what that does to your mail-in return. Because your mail-in return, the refund may be higher if you take the itemized deduction, and your federal refund might be a little bit lower. So you try and calculate what your total refund from both mail-in and the federal combined would be doing standard or itemized.
And our software lets us do that very easily. Push a button and it'll do that calculation in seconds. So very easy. Anything to add, Mary, on
No,
itemized
no, I
deductions or anything?
If people think that they're going to itemize, they really should keep pretty good records because
Yes,
dollar really helps. And sometimes we get very close to having getting benefit from itemizing. And so, especially if they have high medical bills or drug bills, things like that, they're the types of things that really kind of push people over.
Okay.
So we would really ask as a favor to us that if you have itemized expenses that you want to itemize, that you total them. You don't come in with lots of individual receipts for this week and something else next week. You come up with totals and makes our job easier because we enter in the totals.
Okay.
We're not,
We don't want everything in an envelope and then we have to sort it out. And
Right.
and
Right.
we get that frequent. Sometimes we get that.
Oh, I'm sure. But so it is helpful to have those all totaled. But would it be correct in saying that if you are going to do the itemized deduction, that you have documentation?
Yes, we have to see documentation.
Yeah.
Yeah, we do. We'd lose control if you didn't. We have
Yeah.
to see that. It's the same thing the IRS is going to ask for if they want to know why did you itemize. They're going to want to say, show us the documents. And, yeah, very easy. And most people do have them. It's not. Most people do have them. They have their tax records. They have their medical bills. They have their charitable records of their charity contributions and so forth. Yeah.
and you'd be surprised, you can even itemize things like the mileage you take driving to and from the doctor's office or to and from a site where you volunteer. So.
And remember that medical expenses include your medical insurance premiums. Big number. If you're on Medicare, we know what that is because it's on your Social Security statement, your SSA 1099. But if you're paying for supplemental health insurance, or even if you're working and younger and you're paying as part of your employee's healthcare plan, but you're paying premiums, you can deduct those premiums. And that's usually a lot of money, several $1,000s in many cases.
And I know you mentioned before that Social Security, in some cases, is not taxable. Is there a reason why it ever would be?
Oh, yes, Social Security can be taxable up to 85% of the Social Security. What happens is that the tax returns, the IRS takes the amount of income you have and then add your Social Security on top of that and all. And if your income's, it's a graduated scale. The higher your income goes, the more Social Security that can be taxed, up to 85% of it. There's always a 50% that is not taxed regardless of what your income is. And that's on your federal return. On your mail-in return, Social Security is deducted. It's a the state calls it a subtraction. The state starts with calculation, what is your federal adjusted gross income? And then they add things that mail-in taxes that federals don't, and subtract things that the feds tax and mail-in doesn't. And one of the things mail-in does not tax is Social Security.
In general, Social Security by itself, if a taxpayer had no other income, Social Security is not taxable. It's when you start adding other income, and the more you have, then all of a sudden you reach a threshold where Social Security will start to become taxable. And that usually can be a surprise to people. Someone who takes out like a one-time withdrawal from an IRA or from a retirement account to cover needs like you might have this year with COVID and being unemployed and everything. And if you take a significant amount out, all of a sudden, not only are you paying taxes on that, but now all of a sudden, a portion of your Social Security may start to become taxable. And that's the hidden whammy here that people don't see. And all of a sudden they can say, wait a minute, my Social Security was never taxable before. We say, here's why. So something to look out for.
And one of the ways you can protect yourself is a Social Security. You can have federal taxes withheld from your Social Security monthly check. You cannot have state taxes withheld, but you can have federal withholdings. Is a more correct way of saying it.
Okay. Now, if somebody would have done that this year, say that they did need to pull money out of an IRA or some other account like that, but then they typically only have Social Security as income, would they be sent a statement or something that would tell them they would need to file?
The trustee for the IRA will send a statement out. I think, again, it's a Form 1099 that says what their distribution was and how much of it is taxable.
Okay.
There are certain exceptions of cases where the distribution is not taxable. For example, if you're over 59 and a half, the distribution is not that. This year, I believe one of the provisions of several COVID legislation is withdrawals because of COVID are not taxable. But that's, again, these changes because of COVID have become effect because of these specific legislations. And for, at least my understanding is that they are limited to 2020. They have not been necessarily extended to other years.
Just to add one clarification. The age 59 and a half is important. If you have a retirement account, and because generally the IRS, any withdrawal from a retirement account before age 59 and a half, the IRS will consider it to be an early distribution because they figure you're still working and you don't need it for retirement yet. And in that case, generally distributions from a retirement account are always taxable, but there may, if you do it before 59 and a half, there may be a tax penalty of 10%. That's, we're talking about the tax penalty, not applying either before or after 59 and a half, and the COVID relief this year. Even if you take it out before 59 and a half, you don't, the IRS will not hit you with a tax penalty if you need it because of COVID.
Okay.
There's two parts of that. Yeah.
So you talked a little bit earlier about the earned income tax credit. Can you tell us a little bit more about that and like maybe who might be eligible for that if they're not sure?
I'll let you guys take care of that one.
Oh, Mary's not, she doesn't like the
No,
IPIC.
I don't like that question.
The easy part of it, the talking in generality, is the easy way to explain the earned income credit is if somebody does not earn enough money according to guidelines the government sets for how much is a definition of how poverty is defined, then the government will give them a credit back even if they don't owe any tax. You know, it's what we call refundable credit and everything. The tax software we use will calculate the exact amount of the earned income credit. We have the rules in books and everything that tells us what IRS conditions they put on it. For example, a person over a certain age, regardless, it depends, the earned income credit depends on whether you have children, and it depends on whether you have an income level. You can have a credit if you don't have any children up to a certain age, your age, the taxpayer's age. So it's, we don't calculate, the tax preparation software does, but we know the general rules for eligibility.
Okay.
Now we may want to, if we're at the right point now, talk about something that's part of this new stimulus COVID legislation. That was a major part of what was just passed, and people have probably heard about that. That generally, for talking purpose, just to say, generally earned income credit and also the child tax credit, they sort of somewhat go together because generally it's for families with children under 17. There are provisions for some payments for people over 17, but for talking purposes, we're talking about people under children under 17. Those two things sort of go together. The child tax credit, which I think is next on our list, let's just say is generally about $2,000 per eligible or qualifying child per year, and is recovered, is paid to you as part of your paid to you annually as part of your refund on your tax return. People have probably heard now that appears to be changing with the new package, where now they're talking about increasing that maybe up to $3,000 or $3,600 and being paid periodically, maybe monthly, maybe quarterly, whatever, not just once a year when you file your tax return. We're still waiting to see what the details are of that. We don't know yet, and we don't know whether you apply for that on your tax return or the IRS has some other way to calculate that. All of this is brand new, and like everybody else, we're waiting to hear the details. But there are definitely changes in the works on that, and there may be changes on the earned income credit as to whether or not. Right now, you have to have some earned income to qualify. That means income from a job. It doesn't mean, it definitely, it's not unemployment insurance. It's not retirement income. It's not social security. It's income generally from a job.
Mhm.
And they may be changing that, and they may be changing the income levels. So we're waiting to see. Stand by.
Okay, so definitely some big tax changes coming up here
There are,
that
yeah,
may require us to file amended returns, possibly,
if you've
possibly.
already
And
filed, yeah.
if you've already filed.
they won't be identical changes, but some of these things are being picked up by the state of Maryland. I mean, part of the recent relief bill the state passed had some changes due in their version of the earned income credit.
Okay.
Mhm.
So it can affect both federal and state.
Right.
But so in general, the earned income tax credit is for people who probably have children in the house and are probably working and fall below a certain income
In
guideline.
general, yes.
Generally, yes. Yeah.
Okay.
Generally.
And so you mentioned that obviously you have to have some income from a job or employment. But is there ever a time when someone maybe wouldn't make enough income that they would have to file income taxes, but it would benefit them to file anyway because they might get that earned income tax credit?
I think so, yes.
Yes, I think so. Absolutely.
Yep. Yep.
Yeah. If you have dependent children, and you may be eligible for some of these credits, and we can help you decide if it appears that you are eligible, or you have been eligible for past years, and obviously you want to keep filing because you're probably, until your children reach a certain age, will continue to be eligible, again, depending on your income levels. We can help. Our software can help. We are knowledgeable and trained on those issues, and we can help people see if they are eligible. We don't want people to not file and because they think they are not eligible when they really are, and we could have helped them and said, yes, you're eligible. So file, because you're talking about pretty significant amounts of money coming back.
Yeah.
People who have employment, they probably are having some withholding taken out. So they're going to want to file a return anyway to get that withholding back.
Okay.
So it's pretty rare that they don't take out some withholding, even if it's for a low income, unless it's a teenager who just has a summer job or something like that. But usually an employer is going to take out some kind of withholding.
Okay.
Yeah, withholdings is a magic word in our business and everything, because everybody tries to talk about how much their taxes are and how much a refund they get. And the refund is really just a subtraction of what they owe and what they've had withheld. And every year, I always suggest people I deal with it, after you do your taxes, you take a look at what your situation was and did you owe? And if you did owe, one of the things you can do about next year's taxes is to try and change your withholdings. And that can be the employer, that can be with the trustee of your retirement account, whatever. But you want to look in terms of what your withholdings are and try and look into a year into the future. In terms of whether people should file if they think they were eligible in past years, I think a word of caution. IRS generally will only allow you to go back 3 years to make any kind of changes in your tax return if it benefits you. I mean, IRS can go back further if they think you owe taxes, but if you think you get a refund that they haven't given you, they're only going to give it back to you in 3 years.
Okay. So it's important to do that annually.
Yeah.
Okay.
Yeah, we can, just as sort of what Bob said about, we can also do prior year taxes, people who have not filed for the past generally 3 years. We have the software to do that. We're trained to do that. We also can file amended returns. Now, a word on that, on amended returns, generally, we only do amended returns for people who we have prepared the original return for.
Okay.
Because if we did not do the original return before we can file an amended return, we have to recreate from the beginning the original return before we can amend it. That's a lot of extra work generally. So we try to limit ourselves, and generally to the past 2 years, including the current year, for embedded returns for people we created the original return for.
Okay. So for instance, this year, if someone did get help through you guys to prepare the return, but they're one of those people impacted by those new policies you're talking about, you could help them do their amended return if they needed to do one. Okay.
Yes, if we prepared the original return, yes. Yeah.
Kelly,
So
let me
yes,
jump ahead to a question I think we wanted to address later on, and I'm not sure how the time is going. But the question of extensions and our clientele and everything else and everything. As I mentioned, we encourage people to file as early as they can. We're about halfway through the tax season, with about 3 or 4 weeks left and everything. We are still taking appointments, but if the deadline continues to be April 15th, we decided that we were going to stop taking new clients, any clients after April 6th. That means picking up the package on April 6th. Now, with all these extensions and all, we have to draw the line somewhere. So what we're going to be doing is, for those people that we're holding on to the returns for because of unemployment questions or anything else, we will do those extensions. We will do those returns, and we will finish the returns and incorporate all the changes the feds make and the state makes after the April 6th. But we will not accept new clients after April 6th.
Mhm.
So we don't want people to think just because there's an extension, you can wait and come in May or sometime and say, here's my taxes and all.
Mhm.
We're not gonna be in business that long.
Okay. All right. Good to know. So for anyone out there who's questioning whether they should call or not, call before April 6th.
Call now, yeah.
Call now.
Yes, call now.
Okay.
Call now, earlier the better. And
Okay.
before we're all done, we'll give you that number to call again.
Okay. Wonderful. And I'll make sure that when we post this video, that it'll also be in the comment boxes so that people can access it there too. And I know that you had said before several times, but just to reiterate, direct deposit is your best route. Filing online is your best route. Can you tell us a little bit about why that is so important?
Well, in the past, there was the issue was that you get your refund so much faster, you know. The refund in the state comes out faster than the feds, depending on when you file, but it's always faster electronically and all. There was always the question of security, because in the past, I may be dating myself here, there were people that would go in the mailboxes and steal Social Security checks and IRS checks if they were being mailed to the house. They could almost predict when checks were coming and they'd check on it. With your direct deposit, you don't have that kind of problem. It's going straight to the bank and there's never a question about it and all. Now with the stimulus checks, both the ones that have already been sent and the new ones that we expect to be sent, they will come fastest to people with direct deposit. They will come to the bank that's on record that you've had dealing with, either because of past tax returns or because you're getting Social Security or some other form of government assistance and all. If the government has a record of what your routing number is and your account numbers, then they will send it to the bank. So you will get the checks and there won't be doubt about it. Now, if you change banks, that's another question, and you want to make sure they get that information. But direct deposit is always the better way to go for those reasons.
And do you ever encounter times when clients do not have a bank account? Is there still a way for them to e-file and get a direct deposit? If
I'm
they
sorry,
don't have a bank
if they do not have a bank account,
No, I think they need to have a bank account.
Okay.
there may be something about rechargeable credit cards or something like that, or so I don't know. We haven't ever seen that. It's
Okay.
either a bank account or they don't have a bank account.
Okay. I do know that there are sometimes when people have Social Security, they get the Direct Express cards, and I didn't know if perhaps you had encountered people getting their tax returns on those.
We haven't encountered that. There is something, I just ran across it the other day about a rechargeable, and I think it's a credit card or something. We haven't seen it. There's
Maybe like a debit card.
something like
Yes. Social Security issues, they run through a company called Direct Express, so I wasn't sure if you'd encountered anyone who received their tax return that way.
I haven't heard that, but I don't know, with all these new changes, maybe that's something that's gonna.
Might be coming down the pike.
the IRS has got several, they're trying all these new things That's one of them. They're also trying to encourage people to buy savings bonds. So when you get your refund, you got an option of getting some of your refunds through savings bonds you want. You got an option if you have 2 or 3 bank accounts. If you're lucky enough to have that, you can have your refund split between bank accounts,
Mhm.
stuff like that.
Okay.
But
Okay, but for the most part, it sounds like the best bet is to make sure you have a bank account that you can get direct deposit into.
right.
Yeah.
Okay. And I know that we also wanted to address some questions about the IRS because some people have gotten calls and other things. So I know you wanted to talk about that. Can you tell us a little bit about some of those?
It's very important to stress with anybody, the IRS is not going to call your home. So regardless of what they say or anything, if the IRS wants to get in touch with you, it will always be in writing. So just have them hang up the phone because it
Okay.
is not the IRS.
So
They
we'll say that again for the people in the back. The IRS does not call you.
does not call you.
And they don't send you threatening emails or threatening text messages. They do not do that. If somebody's threatening you, hang up. It's
Hang
as
up.
simple as that. They're the bad guys. Yeah.
You know, call the IRS and say you're getting these false calls, but they are not going to call you or send you an email, Bob. That's a good point. They are, or send you a text. They are going to send you a letter to your address.
Right.
Right.
Yeah.
And we don't want to flood of calls, but if you get calls like that and you can't get through the IRS, you can call us.
Okay.
We'll tell you the same thing that we're telling you now.
Yeah, right.
Unless you get a letter directly sent to your home,
Correct.
disregard it. Okay. And so if someone does have questions about taxes, and they are not able to get through to you, or it's something, another question that they have, is there a number that people can call the IRS directly, or should they?
You can contact the IRS at 800-829-1040. Again, it's 800-829-1040. And I think that they would be very responsive and helpful. And just to reiterate what Bob said about, like, if they do have access to a computer, their website, irs.gov, is very helpful. You can get lots of information off of that. So there's 2 ways that people can access information from the IRS.
Right. And if someone is not computer savvy, maybe they can get a friend or family member to help them because they have very good information on there. So ask your grandkids. That's great.
There you go.
They're always,
There you go.
that's my tech, my grandkids are my tech support.
That's what they're there for.
That's right.
And
And
absolutely. And
the libraries, once the libraries open up, I know the librarians would be very helpful too. And hopefully with, you know, how things are lightening up a little bit, that the local libraries will be opening up soon. Let's, you know, hopefully.
yes, they are very helpful technology wise. And also here at Seton Center, if someone's in Northern Frederick County, we are more than willing to help them access digital services if they
Right,
need to. And we do have a computer lab also. So
Good,
we're happy.
good, yeah.
Good.
Yep.
Good.
Yes.
And the
Thank you.
county was running the senior centers and everything. And of course, they've been a casualty of the COVID and they've been shut down. But they were generally the ones that were helping people on, for example, the homeowners tax credits and all.
Yes.
So if they were open back up again, they might be a resource for people. And the homeowners tax credit is a little bit on a different cycle. I think you can apply, and Bob, you can correct me. The tax bills come out in the spring and fall, but the homeowners tax credit comes out in the, like July, or you can apply up to July or August, and then it will be credited back to your property tax bill.
Mhm.
I can give you a few more specifics on that. But generally, the county tax bills for property come out in July.
In July.
Okay. And it'll give you have the option to pay all at once or in 2 payments or maybe some other installment agreement. What the property tax credit says, if you get their application in and they approve it by the 1st of May, and you are approved for the property tax credit, it generally may appear on your tax bill. So when you get your tax bill, your property tax bill now, look to see if there's a state or county credit on there, subtracting from the amount you normally would owe to a reduced amount. But if you don't get it in by the 1st of May, the deadline usually for getting it in is the 1st of September. But if you don't get it in by the 1st of May and it does not appear on your property tax bill, that doesn't mean you won't get it. Just submit it by the 1st of September. And then if you qualify, they will send you a check.
Okay. Thank you for sharing that. I think that's probably something a lot of people don't know. So that there is the state, but also the county tax credit for homeowners.
Right,
Yep,
right.
and I believe if you live in the town of Thurmont, Thurmont has some sort of senior discounts.
I think, yes, I think so.
Okay, that's wonderful.
And you can go to the Thurmont town offices and they have the forms and they can help you do that.
Okay, thank you. And I also know too, I don't know if are you familiar at all with the renter's tax credit then for state of Maryland? Can you tell us a little bit about that also? Because that's something I've run into a lot of people didn't know they couldn't access.
Okay.
Yeah,
Go ahead.
I can start off. I mean, there is, all I know is it's a sister program. It's run by the state and it has a similar, questions that they ask you and everything. And they generally try, the concept behind it, I think, is if your rent is too high for the income that you have, then the state will give you some sort of a rebate to try and make your rent lower. But that's the extent to which I know about it.
And if people use a computer or get help using a computer, you can go on the Maryland state website. It's not the comptroller website where you go for income tax information. It's the Maryland Department of Taxes and Assessments website. Just Google that. And that is the website for property taxes. And that will have a link on there to homeowners and renters property tax credit. The forms are on there, the instructions are on there, lots of good information.
I believe you can also fill that one out online if you want to.
I think so too.
Electronically
I think
submit your
they have a
documentation.
fillable form now, yes. It used to be, have to fill out by hand, so.
Yeah.
Yes. Yeah.
Well, thank you so much. Is there any other information related to 2020 taxes that you think anyone should know?
I think we've covered it all.
Right now.
You covered a
And-
lot of great information. We are so grateful for your time and expertise.
But just because there's so many things going on and so many changes going on, even if you, we want to get you that number to call again before we leave, but even if you don't need us to help you do your turns, you're doing them yourselves, but you have questions or you want to know what's the latest on this change, give us a call. We'll be glad to try to help you over the phone. And Mary, you want to give us that number one more time?
The number is 301-471-5757.
So again, we appreciate your time and expertise. And I hope you have a wonderful day and thank you for all that you do for Northern Frederick County.
You're welcome.
Thank you
for having us.
All right, bye-bye.